Thanks, Vince. So crypto, time to grow up. It's interesting. We're having this panel a week after a big Binance settlement. How many people are familiar with the Binance settlement from last week? So a decent amount of the audience. $4.3 billion fine. CEO pled guilty to anti-money laundering, sanctions violations, and the market has rallied. And I think that the key element there is that this was a removal of an overhang and a key maturation point for the industry. I'm Seth Gins, managing partner at CoinFund, one of the largest asset managers in the space. We have a great panel here, a lot of different perspectives. Maybe we can go down the panel and have introductions, and then we'll get into some interesting questions. Basil?
Hi, everybody. I'm Basil Askari, co-founder and CEO of MidChains. We're a regulated multilateral trading facility, which is an exchange and a custodian here in ADGM. We're practically part of the furniture. We've been here for the last 6 years, and it's nice to see that the conference keeps growing every year.
Hi, Dan Tapiero, founder of Tenti Holdings and One Roundtable Partners. We're a growth equity fund that invests exclusively in the blockchain crypto Web3 world. We've invested in 24 companies in the last 3 years, deployed $1.2 billion, and I think are hopefully going to be part of the growing up of the crypto world. Yeah.
Thanks, Seth. My name is Simone Maney. I'm the CEO of Elliptic, and we pioneered blockchain analytics for anti-money laundering purposes in crypto. This is my second edition of Abu Dhabi Finance Week. Great to be here.
Great. Thank you, Seth. And thank you to the entire ADGM and ADFW crew. We know there's been a lot of work put on to put this event up. My name is AJ Nelson, co-founder and chairman of RAIN. RAIN is and was the first regulated crypto exchange, brokerage, and custodian here in the GCC. We first got licensed in Bahrain with the Central Bank of Bahrain in 2018. And we recently just got our full license here in the ADGM with the FSRA and are now able to serve customers here in the UAE with a local bank account, which is really exciting.
So I started with the assertion that we are growing up, and you heard AML, compliance, regulation a bunch of times as we went through intros. Can each of you talk a bit about what the Binance settlement means for your business and how it ties into how you're building compliant, regulated businesses?
So I think from our perspective, we started out our journey even 6 years ago thinking to ourselves, if we were going to attract institutional capital into the space, which has been our business model, that we had to be compliant. We had to take all of the traditional finance best practices and adapt them into our industry to the best of our abilities, and partnering with as many of the best service providers that we could find who had shared that philosophy with us. And so what this means for us essentially is it certainly does help us answer a nagging question that has always been coming up on our board, at least, and I'm sure with many other regulated virtual asset service providers, is, it finally happened. There is enforcement action being taken, and the thesis that we've all had, which is going regulated first, is going to be beneficial in the long run, is starting to play out in the way that we predicted.
Yeah, I see it a little differently, and that is that I wouldn't call them bad actors, but the businesses out there that aren't doing the right things won't attract capital. I mean, we passed on over 100 deals in the last 18 months, including, thankfully, FTX 3 times and Celsius and BlockFi. When you do the diligence and you really do the work, some things stand out, and hopefully our capital will be allocated towards those good actors also going forward. So I think it's a matter of necessity. Yeah,
absolutely. Simone?
I think one of the things we need to do is to put this into context. And it certainly feels like a watershed moment for crypto. But when we look at broader kind of financial services, regulation and enforcement, this is just one moment. And the US regulators in particular have been doing this kind of thing for decades. You know, if we look back kind of 10, 20 years, this was sort of almost commonplace in traditional financial services. We saw something like a $9 billion fine with BNP Paribas, and almost $2 billion, I think, with HSBC. You could name many others, you know, Danske Bank, Deutsche Bank, HSBC. So I think we need to see it as part of that overall narrative, and what this represents is not something that's necessarily happening to crypto.
Yep.
It's something where the regulators are saying we will continue to enforce and encourage accountability and transparency. So I think from our company's perspective, from the industry's perspective, it's really important that we look at it like that and take the opportunity to say we're being regulated like the traditional financial services industry, which gives us an opportunity to grow up.
And on that topic, and sorry to jump in here, can you talk about Elliptic's tools that drive that transparency and compliance, and how it's different maybe from how that transparency and compliance would be dealt with in the traditional financial world?
Yeah, very happy to. And you know, you're drawing out a really key point there, which is that the transparency of crypto, we need to see that as a feature, not a bug, right? It does give us a significant benefit when it comes to anti-financial crime. It allows us to trace provenance of transactions all the way to the genesis block if we need to. And that allows us as an industry to actually, almost by design, have means of value transfer that is more compliant by design. And I think the more that we can lean into that together and really embrace it as something that's really positive, we'll be able to actually innovate kind of past this moment faster than the traditional financial services industry was able to. Yeah. And you know, Elliptic's been around 10 years this year, which means we've been providing products and services and tools to promote safety and transparency in crypto for a decade.
Yeah.
And you know, we've been on that journey with some customers for a decade. And I think that's also really important for us to remember. Yeah. You know, there have been businesses in this space that have been taking that approach even before any kind of regulation existed anywhere in the world.
The bad actors make the good headlines, but this transparency element, it's such a key differentiator for building finance on crypto rails. AJ, from a compliant, building a compliant exchange perspective, can you talk a bit about what the implications of some of these headlines are for your business?
Absolutely. To be very direct, it's as Basil was saying, it's fantastic news for companies like Rain, for companies like Midchains, you know, the Coinbases of the world, if you will. When we started our outreach and contact with the regulators, you know, going back to 2017 at the Central Bank of Bahrain, you know, going back to 2018 with ADGM, you know, it took us 2 or 3 years in Bahrain, you know, to establish a framework, to get a license. You know, here in Abu Dhabi, it took us, you know, almost 5 years to get a full license. You know, get the local banks, you know, the local payment processors, all involved and educated. And during that entire process, you know, while we chose to go, you know, when we think about our company, you know, we thought about a 10 or 20 or 30-year horizon. Right. And if you look at the traditional financial markets, the regulated exchanges, you know, you have to be able to put nearly an unlimited amount of money through the system, right, to be able to create a profitable business. So when we looked, you know, back in 2017, it was very clear that we had to take the regulated path as opposed to the unregulated path. And we knew that the actors and the companies that took the unregulated path, you know, they would get a lot of short-term profits. You know, they would be able to release features and products much faster than us. But the longevity, you know, is really what builds trust. And it was honestly music to our ears. And we think it likely should have happened, you know, some time ago, if we're being honest. And as Basil was mentioning, very difficult board meetings when you have players, or a player that's able to kind of brazenly, do whatever they want for quite some time and break all the rules and break all the laws, and trying to compete against that is very difficult. So it was music, music, I think, to our ears, and I think the markets are reflecting this.
Yeah.
If Rain or Midchains had publicly traded stock, I think our stock would have gone way up, right? If you look at Coinbase's stock,
Yeah.
Coinbase has gained, I think, some 10 or 15 billion in market share in the last 2 weeks because of all of this.
Yeah. A bunch of you talked about multi-year journeys with the regulators. Is that changing? Are you seeing, obviously not changing off of Binance a week and a half ago, but are you seeing a willingness to engage more quickly to recognize the fact that being compliant is not easy, as a bunch of you pointed out, and but it's what we want to encourage, and therefore there's a need to move quickly? Maybe Basil, yeah.
I wouldn't say it's not easy. Actually, it is easy to be
Yeah.
compliant. It's a conscious choice. All the infrastructure from traditional finance exists to support that choice. What makes it difficult is when there is, I think, a lack of awareness in the market of who is actually compliant and who isn't, and the advantages and disadvantages that one side or the other might have on the table. I'm sure the panelists can talk a little bit more about that point as well, but that's been my experience over the multi-year journey.
Interesting. Dan, are you within the 100 companies that you've looked at recently? Are you seeing any shifts between the businesses that are kind of outside of the core heavily regulated areas? Are you seeing more businesses, less businesses go into those more highly regulated parts of crypto?
Yeah, I mean, I think the Binance story really, says it all, and I think it sticks out a little bit. I mean, it's the U.S., and the U.S. has been very aggressive. The previous panels were talking about different jurisdictions like UAE, et cetera, Singapore, Hong Kong, that have been more clear in terms of their frameworks. But I would say this, I mean, we have a board representation on 11 of the businesses we invested in. And so we do see growing up, as this panel is titled. People really are focused a lot more on governance, on doing things the right way. And I would say that not doing things, let's say, the right way or cutting corners ends up restricting your potential growth. And so there's a bottom line to this. You're being rewarded for taking the right path by the market. And so, I think that's setting the tone. I mean, I don't know, Basil, it seems like you would agree with that. Yeah. So, yeah.
AJ, Simone, do you want to comment on whether you've seen an acceleration in your ability to engage with regulators, or?
Yeah, so from our perspective, we're certainly seeing an acceleration in our engagement with businesses that are regulated or trying to become regulated. But again, as I was saying earlier, this is just a continuation of a long-standing theme that we've seen. We're starting to see some of that accelerate. I think one of the things we're going to see in the digital asset space in the next year or so, as a result of this taking place, is a bit of a slowing down in order to speed up. Not universally. Some businesses are already taking that approach, as we've talked about, taking a long-term view, investing in responsible growth. But we're going to see a leveling of that playing field now. And so we are definitely seeing some businesses come to the table because they are now appreciating that compliance is not an option, it's the only option.
Yeah.
And I do think that will, as I said, level the playing field out. At the same time, we're going to see an unleveling of the playing field in a different way, I think, which is that as regulations and expectations get clearer, the traditional financial services industry will step forward because they have almost an unfair advantage to compete in a highly regulated environment. They have been doing this for decades. They know how to do it better than anyone. And so I think that is the shift that we're going to see over the next 12 months?
But
go ahead, Dan.
I think the two worlds will eventually sort of meet in the middle, kind of thing. I mean, originally, the space has been around almost 14, 15 years, and I think originally people thought that this digital asset ecosystem would grow up on its own, sort of separately in this little world. And when it was worth 50 billion or 100 billion, or maybe that was the right framework. But now you have around $2.5 trillion of value sitting in this digital asset ecosystem. So all the value of all the equity and all the value of all the cryptocurrencies, and it's just too big now. It's just too big. When things get large, you need to manage them. You need to have proper leadership. So all of those things, I think, are going to help. Acknowledging that, are going to help growth going forward even more.
Well, and I love your focus on governance.
Yeah.
Right. And what you're seeing at the board level. And I think, to Simone's point, that's also the governance of a lot of the service providers becomes a gating factor for traditional financial engagement with crypto. What are some of the other big gating factors, or what do you think really opens up the door to traditional financial institutions engaging with crypto in a more significant way? Maybe Basil, do you want, or Dan, go ahead.
Well, I was just going to say, I mean, for a lot of people, it's just philosophical and then age, of course. But Larry Fink has done a lot here to help us out. Everyone is aware of his about face, and I think most people think he will get the ETF both for Bitcoin and Ethereum, and for at least Americans, and the U.S. still holds a vast amount of world wealth. I mean, that was a big signal. We've seen the response in the markets, but the minute that people can just push a button and in their equity account, the exposure shows up, then they start talking about it at parties and out with their friends, and then people's minds begin to open up more. So I think it's just a matter of time.
And by the way, one of the key unlocks with the ETF is the fact that you have a bunch of service providers hand-chosen by BlackRock going down through Coinbase, executing and custody, that financial advisors don't have to trust. They don't have to be focused on, or they have inherent trust in them. They don't have to question their ability to trust.
Yeah, I mean, that's the great point, is that companies that are in the gray zone or not focused on this, they will see they can make more money by following, just a modicum of the rules that are out there. And so I think, again, that's going to be the motivation, right? Yeah.
Also, what do you see driving more traditional financial institution engagement?
So I want to bifurcate it for two things. One is traditional financial institutional engagement, and then non-financial institutional engagement, because I think these are two fundamentally very different areas, at least that we've had some experience in over the years. And on the financial institution side, compliance has always been the focal topic, which is incredibly important, but I think it should become more of a background subject that is just expected, that it's a given. And the focus should be on product that is built with that mind. And so it then should be more about how you deliver those services and those products to the wider financial institutions in order to compete for that business, or potentially to be part of the ecosystem with the incumbents who do have a natural advantage. And so, the focus should be more on product, and the frameworks should be just ingrained in our minds as part of the rules of the game, let's say. And then for the non-financial institutions, they don't even assume that they understand how to be compliant in this space. They just want to know that, yes, I can check the box, you are compliant, I'm going to rely on you fully, and then I'm only going to focus on product. What is your product? What is your service? And that's all that matters. So I think what we need to get better at is building product for the sake of product, but also building product that accounts for, at least in the background, the things that are truly expected of us as an industry.
And just for the audience, what's an example of a non-financial institution that would be working with Midchain?
So I would say where I think the majority of the adoption that's going to happen for the next generation is going to be through video games. It's going to be gaming assets. And I think as soon as these gaming assets become transferable and tradable and a market develops in them, they now become financial products. And I think for the younger generation to get comfortable using wallets, comfortable trading, and then firms to eventually get, or an ecosystem to build around this financial product, is going to actually help promote the growth of the industry in the non-financial sector naturally.
I just want to say one thing about the traditional guys having an advantage, maybe in terms of regulatory and in processes, but very difficult for them to conquer the complexity. And they're not really built for the kind of creativity that we see in the space. And so I don't see TradFi taking over, the digital asset world. As I said, I think that they could be potentially complementary.
Well, and I think there's an obvious but understated complexity for traditional financial institutions coming into the space, and that's 24/7 operations.
That
Very different from markets that operate 9:30 to 4 Monday through Friday, and then you have a lot of off hours for settlement reconciliation. I think that's a core competitive advantage of crypto native businesses. What one interesting closing question ties into the idea that growing up still involves keeping your dreams. And all of us on this panel came into the industry with dreams around what crypto can do that's different from the way that the traditional financial system operates. Maybe starting with you, AJ, what are some of the dreams that are now on the path to being realized? What's come into that product maturation phase that now is going to hopefully take off with a more compliant crypto ecosystem?
Yeah, I'm honestly just thankful and grateful that I was born at the era I was, and I was a little too young to be able to work on the internet when it came out. But now I'm of age, and of the right skill set to be able to work on what we believe, and I'm sure everyone on the panel, is the next biggest piece of technology that likely will be more important than the internet, right? And Simone mentioned she's been in the industry for 10 years. I joined the industry back in 2014. I was at a small brokerage and then Kraken for some time. We were all living off Bitcoin back then. We got our full salaries in Bitcoin. We had Coinbase debit cards. We were swiping. We were spending. We would have never imagined that Bitcoin would have gone from $100 to $69,000 like it did, and I'm sure it will only be much higher in the future. And what I think that signifies is just how powerful the underlying technology is. I still don't think the world understands how powerful it is to be able to send money around the world to anyone. If you're on the correct blockchain and things are optimized, for literally cents on the dollar. You can move billions of dollars around the world for cents on the dollar instantly with no regulated counterparties in the middle, right? So that technology will absolutely change the world. How? I think we're starting to see it unfold, right? And the regulated TradFi markets, I think they're very good at compliance. They obviously are entrenched in regulatory capture. They're entrenched, in regulatory relationships, but they are many years behind understanding this technology. And just giving the internet a currency is probably the most valuable thing in the planet, on this planet today, and having the ability to send money between planets, right? I don't think we're going to be sending USD from our Earth to Mars, right? So I just feel incredibly thankful that we're in the era we are now with crypto, and it's hard to predict the future, but everything that money does and everything that finance does, I think crypto will do. But it is it's the wrong comparison to think that crypto is eating like TradeFi and finances markets. It's creating
Very complimentary.
yeah, it's
Very
well,
complimentary.
I'd say it's even creating like a completely different one that we just don't even know yet. So we're excited to be here for the ride.
Wonderful. And Simone, we'll go down 45 seconds each of you. Just the dreams that now you're implementing, and Dan, the dreams that you're now investing in.
Yeah, sure. So just to be clear, I don't know that pursuing our dreams as an industry is at odds with compliant growth. I think the two things
No,
are really
very
supportive
complementary, yeah.
of one another. Binance are now going to be under a monitorship. So they're going to have an independent third party in there making sure that they are putting in place the controls and running operations appropriately. I have been a monitor inside a foreign-owned bank in the US that was also put under a deferred prosecution agreement. And that, for me, is part of why I do what I do now. Because while I was conducting that monitorship, what was really clear to me was, yes, this bank is now putting in place all the resources and everything to be compliant, but this is not enabling growth.
Yeah.
It's actually slowing things down. So what's really important for us as an industry is that we figure out how do we continue to grow, but do it in this different way that so many businesses have already embraced. And I think that really is what is so powerful about blockchain, and that's what we've got to lean into.
Wonderful.
Okay, quickly, dreams, freedom and independence.
Yeah.
And, these are truly free markets. There's no intervention, vis-a-vis governments or anything. I think there's no reason why you can't be free and independent and still abide by some set of rules. So dreams are still the same.
Yeah.
Yeah.
Wonderful.
Yeah.
So I guess in my past, I used to always be in the complex side of financial services on TradFi. I really enjoyed complex private equity, private credit, and public equity situations. And I think what excites me the most going forward, just to keep it very short and sweet, is that I'm excited to see new products we haven't thought about yet that solve complex problems, but do so in a manner that provides a simple and elegant solution to those complex problems. And I think that's what excites me the most.
Wonderful. Thank you, Vasil. Thanks, everyone. This is a fantastic panel. Growth, but in a compliant, regulated way where dreams are still able to be fulfilled and remain intact. Thank you very much.
Thank you.